Can your child have a credit score? It may sound counterintuitive, but a child can indeed have a credit score. Just like with adults, if a child's name is on a debt-related account, they can also have credit reports and scores in their name. So, how does a child's name end up on a debt account? Well, there are a few ways that this can happen. But before I break down all the details for you in this video, in case you're new around here, my name is Nima and welcome to the channel. I'm a corporate executive with over 15 years of experience in both sales and finance. My videos break down complex financial concepts to help you on your financial journey, whether you're just starting out or if you're already a seasoned pro. So guys, let's jump into today's topic, which is, can a child have a credit score? Now, the first thing I'll mention in this video are shared accounts. You can add your child's name to your credit card account to help them build credit or to give them access to your credit line. The next note I'll mention is mistaken identity. It's possible that your child has a similar name to someone else, usually a family member, and that person's information was mistakenly used to create a credit report for your child. And the last quick thing I'll mention is identity theft. If your child is a victim of child identity theft, a crime that involves using a child's information to commit fraud or apply for credit cards or benefits, it's something to look out for. Now, let's get into the actual topic of this video: how to build your child's credit. Guys, in my experience, most parents don't think about their children's credit scores until it's time for the child's first loan or apartment. But if you wait until you reach that point, your child's credit probably won't be good enough to qualify. To avoid situations like these, parents can take the following steps with their young children to get them established for the future. So the first tip I'll provide you is to add your child as an authorized user. Do you have good credit? If so, the best way to help your child build up their credit scores is just to add them to one or more of your credit cards as an authorized user. When you do this, the details of the credit card will show up on your child's credit reports and it will be used to calculate their scores. Credit scoring models consider several key factors when calculating a credit score. That includes payment history, account age, credit utilization, and types of accounts. When a child is added as an authorized user, these factors transfer to their credit profile. For example, if the card has never missed a payment, the child inherits that positive payment history. If the card has been opened for, let's say, 10 years, the child's credit report shows a 10-year-old account, giving them a long credit history right away. Keeping that balance low compared to the credit limit also helps the child's credit utilization ratio remain favorable, which can significantly boost their score. The child doesn't need to touch the card or spend the money themselves for this to work. Simply being listed as an authorized user is enough to report the positive history to the credit bureaus. For example, if you've had a credit card open for the past 10 years, your child's credit reports will show that they have a 10-year credit history, as I mentioned before. Now, to do this the right way, make sure that you choose the account wisely, since your negative history with a card can impact your child as well. The best credit card to add to your child as an authorized user should check all of the boxes, including the following. You haven't missed a payment for 2 years or more. The longer it's been since a missed payment, the better. Your balance on the credit card is low compared to the limit. The lower it is, the better. You've had the card open for a long time, so keep it low. Also, for added benefit, try reducing your credit utilization ratio before adding your child as an authorized user. You can do this by paying down the card's balance or by logging into your account and requesting for a credit limit increase. But guys, before I dive into more of the details of whether a child can have a credit score, if you're gaining value from this video already, I'd really appreciate it if you could smash that like button, leave a comment down below, and subscribe. Your support helps this channel grow, so please go ahead and show some love by smashing that like button, commenting down below, and subscribing. All right, now let's get into the next segment. So the next thing I'll mention is to check for credit reports and dispute errors and frauds. Don't wait until something goes wrong to find out if your child has problems with their credit. Instead, check to see if they have credit reports already in their name and find out if there's any fraudulent information on those reports. For children over the age of 13, you or your child can pull all three of their credit reports by submitting online requests to each of the credit bureaus. If your child is under the age of 13, the Children's Online Privacy Protection Act restricts you from making a request online, but you can mail a request to each of the following credit bureaus. That's Equifax Information Services, Experian PO, or TransUnion Consumer Solutions. If you find a fraudulent account on your child's credit reports, you need to contact the creditor's fraud department to report the issue and close the account. Then contact each credit bureau to have the information removed. Now, the next thing I'll mention on my list is to freeze your child's credit. When you place a credit freeze on your child's credit reports, you make it harder for fraudsters to open up accounts in your child's name. For children under the age of 16, you can do this for them by visiting the following sites: Experian, Equifax, or TransUnion. And now, the next thing I'll mention on my list is to also teach your children how credit actually works. The goal of helping your child build good credit scores is to give them financial advantages when they reach adulthood. But without some education, your child could end up using their good credit to get in trouble with loans and credit cards. So instead of just helping your child build up their credit scores for them, start talking to them about how it actually works as well. Depending on their age and maturity level, this could include any of the following. One would be role-play making purchases with fake credit cards and paying those cards off. Explain that they'll owe more money if they make late payments. Let your child play the role of the creditor and ask how they would decide if you qualify for a loan. The next thing I'll mention is visit annualcreditreport.com together just to pull your credit reports and read through the details together. And then the next thing I'll mention is use debt payoff calculators to show your child how long it will take to pay off high interest debt. Allow them to use one of your credit cards for a small purchase every single month and then have them pay it back by a set monthly date. This will help build that habit for them as they grow older. Now make sure you don't underestimate what your child is capable of learning. According to Champlain College Center for Financial Literacy, children can start learning financial basics both in elementary school or as soon as they learn how to count or perform basic math. Now, that aside, I will also share some additional steps that parents should take. Make sure to start early, but keep it simple. You don't need to open accounts the moment your child is born to help them build credit. The best time is actually to start when you usually already have a strong, stable credit yourself. Adding your child as an authorized user doesn't mean giving them a card right away. In many cases, the credit history still reports even if your card stays in your wallet. The goal early on is to build history, not spending habits. The next piece of advice: use credit as a teaching tool, not free money. When your child is old enough, slowly introduce them to how credit actually works. Start with small, controlled purchases like gas or a streaming subscription. Show them the statement each month and explain what the balance, the due date, and the minimum payment mean. Make it clear that credit is borrowed money, not extra income. This helps them build responsible habits before they ever apply for a credit card on their own. The next piece of advice that I'll provide you is that you should protect their credit just like the way you protect their identity. A child's credit is just as valuable as an adult's, if not more. Freezing your child's credit prevents criminals from opening accounts in their name. You should also store your child's social security number securely and avoid sharing it unless absolutely necessary. Check their credit reports periodically, even if you don't expect any problems. Catching fraud early on can save years of stress later. Another piece of advice that I'll share with you guys is avoid common mistakes parents make. One common mistake is adding a child to a card that has late payments or other high balances. Another is giving a teenager unrestricted access to a credit card without clear rules. Parents sometimes forget to remove authorized users when the card's usage changes or when the credit worsens. Your credit behavior directly impacts your child's credit profile. Always be sure to review accounts before and after adding your child. Another piece of advice is setting up your children for independence before adulthood. As your child approaches adulthood, prepare them to stand on their own financially. Teach them how to read their own credit reports and understand their credit score. Help them open up their first checking account and budget monthly expenses. Talk openly about interest rates, debt, and long-term financial goals. By the time they turn 18, credit shouldn't feel scary or confusing. It should feel familiar. And guys, my final thoughts and advice to share with you: building your child's credit isn't about rushing or gaming the system. It's about setting them up with strong habits, clean credit, and protection against mistakes and fraud. A little planning now can save them years of struggle later. Credit is a powerful tool, as you know, and when it's used the right way, it can advance you financially forever. Guys, I appreciate you watching this video. If you feel like this video helped you, please hit the like button, subscribe, and tune in for more money credit tips along with several other videos that I'll be posting very soon. Also, please drop a comment with your thoughts. Let me know what videos you like and what topics you want covered next. Thanks again for watching, and I'll see you guys on the next video.